What's going on, good people? Welcome back to another episode of Trading My Funded Account. Today is day number 39. It's December the 5th, 2023. We made some trades today, so let's get into it. All right, trade one, let's go ahead and jump right in. So at trade one, I went long right here as prices retested the higher low at A. But even my best setups can be thrown off by a news release. Now, today we had a news release come out at 10 o'clock. We had the ISM Services PMI. So that's a producers manufacturing index. Pretty much they take a survey of production managers around the country and they ask them like, hey, how much merchandise are you buying compared to how much you used to buy? And that basically just gives an overall insight as to what the underlying economy is looking like. So that makes a big difference when it comes to the market because a lot of traders use that to place positions or just to ride momentum if momentum comes in. So that's what came out today at 10 o'clock, which is what led to this large volume spike followed by a high volume candle all the way back up to the upside, right? Now, the only thing about news is that most of the time I don't trade news initially. I avoid the initial reaction because if you know news like I know it, man, look, you know that news can go either way. So it can be very unexpected. But what I have learned is that more than likely, most of the time, the market is going to make an extreme move, but it's still going to respect the principles of price action. Most of the time, not all of the time. Sometimes it'll just go crazy and have a crazy looking wick to the upside and to the downside. But majority of the time, it's going to respect price action. So I said, okay, I know that news is coming out, but I still want to take my setup because it looks absolutely perfect. It's the first higher low of the entire session at higher low A. We had no lower high on the pullback back down to support. So that makes this higher low a very high probability setup. There are no bearish signs in the immediate vicinity that tell you to think otherwise. So you should definitely be looking to go long. And I just missed out ever so slightly on this trade. I have my normal stop up here. I did not move my stop or change it. But look at where I got stopped out at. Literally at the bottom of the wick. And sometimes when it comes to a higher low, it's just like that. Like sometimes that higher low is going to get pushed through. Prices are going to come back to retest the double bottom that the higher low actually came after. And then they spike back up through that higher low level and then continue to the upside. Now, usually when it comes to a trade where I feel like I got in at the right levels, at the right price and did everything right, and I still get stopped out, if prices spike back through immediately after, I get back into the trade. But the price moved so fast when the news came out that it was impossible for me to get into a trade unless I already had an order there, and I didn't. It was like bang, bang. Like it was, my order got filled and then it got stopped out. I don't even know if it was in 1 second. It was probably like half a second. So it was really quick. So I just had to pass out on that. I just had to pass on that one and miss that trade, that second entry. But it's okay because I learned a good lesson, which is when it comes to the news, you can still take the same setup that you want to take if everything is perfectly aligned. But you might just want to change your position size or change your stop loss, or preferably do both. So because you know that volatility is going to increase, more than likely the stop that you have might get hit. So what you can do is decrease your contract size by half. So since I was trading one contract today, that I think that's equal to 10 micros. So that means I should trade 5 micros on a news announcement and then just double my stop and double my take profit. So that way you get the same numerical results. So on a normal mini contract trade, $5 a point, I'm aiming for $20 a point. That's $100 in profit, or a 13 pip stop loss. That is what, 15 plus 50, so that's a 65 point loss. Well, $65 loss, right? But if you trade a smaller size, you can accomplish the same dollar amount, but just give yourself more leeway room in order to account for that volatility. So I think that might be something that I can do in the future if I do want to take a trade based on a news event setup. Because sometimes you see the perfect setup, but you still got to adapt for the market volatility and the type of environment that you're trading in. So that right there is one of the biggest lessons I learned from trade one. So then after that move, we see prices spike all the way back up into the zone that we established in the pre-market. So the pre-market zone was in between these two blue levels right here, and that established the zone that we pretty much traded in for the majority of this session in the morning. So the top of the zone was at 36,000, around 190. The bottom of the zone was at 36,000, around 150. So once we peaked up to the top of that zone, we didn't quite test it per se, but we did form a higher low at B. So when I saw B, this was very similar to some of the higher lows that I've seen over the past couple of weeks, where you have a very strong move to the upside and then you see a higher low get formed. So what I've learned from those moves over the past few weeks is that a higher low like this is a very strong higher low, and it has a very strong possibility of seeing continuation to the upside in a very immediate future, which actually turned out to be true on this trade, but I still took a loss on trade 2 by going long at the higher low support level. But the reason I took this loss, if we read the notes, it says because I took the second entry, and taking the second entry, that's unreliable. I have to take the first entry. So let's zoom in a little bit to actually see what I'm talking about. So, okay, we have the higher low right here. We circled it up, drew our level of support across it. So when you get that first green candle out of that higher low combination, you look for the first retest as prices come back to retest the support level of the higher low. Now, in this situation, we didn't necessarily come all the way back down to retest it at first. And if you look at it, it kind of makes sense. Because remember, I told you we were trading in the zone between these two blue lines. So we had the higher low form right below the zone. And then it pushed us above the zone back into it, where we closed inside of the zone once again. So if the bottom of the zone, we know that should act as support. But we also have a little support level down here too. But what I've learned in situations like this is that it's all good to go long at the bottom of the zone if the higher low is like a couple of points away from the bottom of the zone, because it's really trying to just be absolutely perfect if you're trying to catch the higher low right here when you have another major level of support right above it. And if you look at where this candle came back to, it literally wicked out right at the bottom of the zone, and then we see prices come all the way back up. Not quite, but close enough where I could have definitely been able to achieve my scalp target out of that. So that right there was the first entry. But then I caught it 3 minutes later on the way back down, and I caught it in front of a very strong selling candle, which is definitely another one of my rules that I try not to break. But on this one, I just kind of was like, well, maybe it'll turn around, but it didn't even give me a chance. It just pretty much just shot straight down. So when it comes to your favorite setups, you still got to enter at the right possible times, and that's so important. It's not just about knowing what to do, but it's actually about going out there and executing the plan and making sure you do the right things. So always remember, make sure you take that first entry, and if you get a chance to take that second entry, just skip it, let it be, and wait for the next best opportunity that comes to you in the market. So that pretty much takes us on to trade number 3. Now at trade 3, I went long here. I went long as prices retested the support of higher low E1 right here. And then I kept my stop tight because of the lower high above at E. Now, the other day on one of my other videos not too long ago, I talked a lot about making sure that you give your best setups room to breathe. Now, this scenario is different because this was my best setup until the lower high started to get formed. So I talked about the lower high at E right here, indicated by this blue circle. But it was also another lower high that got formed right here. So we can call this one E2. So at E2 and E, so at E and E2, we have 2 lower highs, but we're still coming back to retest a support level, but we still have a long string of higher lows from before. So we have higher low letter C, higher low D, followed by higher low E1. So in reality, we're really making more so of I would call it a triangle, where you can connect the trend line between boom, boom, and boom, but you can also connect the trend line between boom, boom, and boom. So in those situations, it's kind of tough, but I still take the higher low setup. But what I do is I'm like, okay, it's kind of risky taking it right here because we do have lower lows and lower highs, but also higher highs and higher lows at the same time, which is establishing the triangle that we're talking about. But I believe in the setup so much that I still want to take it. But because it's a little bit risky, let me just keep my stop tight. So that's what I mean when I say keep your stop tight. You know, sometimes you want to leave your stop where it is. If there are no conflicting signals that say that the market could go against you, you leave your stop where it is. But if you still want to take the trade, even though you see some conflicting signs, you keep that stop loss tight and it'll protect you. Now, in today's scenario, this really wasn't too much of a protector for me having a tight stop. It really just ended up stopping me out at the bottom of the move, literally at the lows of this wick right here. But that's okay because like I was telling you guys before, one of my biggest rules is that if you get into a trade where everything works out, you get in it, right price, right direction, right time from the right levels, and it doesn't work. If it spikes back through that price that you originally entered at, you get into that trade again and you ride that momentum. And that's exactly what I got into at trade number 4. So let's read the notes. So at 4, I got back into the long trade from trade 3 as prices popped back above support, which is exactly what I'm supposed to do. And I think I played this trade very well for what it was, meaning that I saw the higher low. I went long as close as I could to the bottom level of support after I saw prices spike back through my entry price. And then I took prices all the way back up to the next level above, which made a lot of sense. Now, if we read the next part of the notes, it says a higher low that's formed below the zone increases the chances of the top level of the zone being tested again. And I say that because I've seen it happen so many different times where you might have a breakout past the zone, but then eventually prices move back up to the bottom lower level of that zone and establish a higher low like they did right here at F. That tells you that more than likely there is buying pressure in the market, which could have a greater chance of pushing prices back up to the top of the zone. And the reason I mention that is because I feel like trade 4, I did a great job. That was my textbook trade when it comes to the higher low setup. But there are scenarios where I should hold a trade and continue to hold it. Now on trade 4, I think I did a good job of getting out right here because when I got out, that was pretty much the best that I could do at that time because this higher low hadn't been formed quite yet. This higher low at F got formed on the next candle. So what I should have been doing, I should have been going long anyway and going long once again in expectations that prices were going to the top of the zone because everything lined up. I understood that a higher low below the zone leads to prices coming back to the top of it. I saw the higher low. I was already in a long trade that was profitable, so I know that the uptrend is strong right here, right now. So it would just make sense to take that trade at F and only get out of it if you see any conflicting signs or any lower highs start to form. And that never really happened in today's day. So I just feel like right here at F, even though I didn't get in, this was definitely a potential trade that I could look for in the future. I just think today I was really happy about trade 4 because that was literally a perfect textbook trade. So I was like, yeah, I was feeling myself a little bit, but feeling myself so much to the point where I was kind of ignoring what was going on right here. I was just on cloud 9. I was like, yeah, I did that. But that's why you always got to stay focused. You know, if you want to look back on your trades when you do your trade review and say, oh yeah, that was a great trade, you can do it then. But when you're in the market and you're in the moment, if you have a good trade or a losing trade, it doesn't matter. You need to snap back once that trade is over. Look at what's going on in the market and see if there are any things or any trades that you need to take or if there are any moves that you need to do. And you need to stay on top of your game and pay attention to all details at all times. You need to be 100% focused, not 99, not 98, not 99.99, 100% every time. And that's really the biggest takeaway that I took away from trades 4 and trades 3. I learned a lot right there about the higher low. So then we continue moving up through the zone. We establish higher low G, higher low H, and then we finally break above the zone. Now this is where it really gets interesting because at higher low I, things start to get a little interesting. Now, what I've learned the hard way is that when you have a breakout above a zone and you have that first higher low after that, don't go long at that higher low because I'm not really a breakout trader. And a lot of times when the market breaks out, it has the tendency to somehow, some way get back into that range that it broke out from. So for me to be able to take a higher low after we have a breakout from a range or a zone, I need to see a huge move to the upside where it's pretty much no doubt in anybody's mind in the market that the breakout is legit. That was not the case today at higher low I. Higher low I was a higher low, but the top of the zone was 190. This one pushed up all the way up to 36,210. So it was a 20-point move above the zone, and it really wasn't on strong momentum volume candles. A lot of these candles had wicks. They kind of played around for a little bit, and then eventually they was like, yeah, okay, let's move up. But that's not really the strongest up move. So I was like, all right, I'm not gonna go long when prices come back to test I, because for one, I don't want to get caught up in a false breakout, and the breakout doesn't look strong enough. So let me just see what happens. So that pretty much led us to this lower high that got established at J. So anytime you have a higher low that gets broken back down through, that right there is a higher low failure. Now I have some examples that I want to go through today, after we talk about trade 5, so I can just kind of paint the picture to show exactly what I was looking for right here at trade 5 and letter number J. So let's go ahead and just read the notes real quick. So at 5, I shorted after seeing a higher low failure at I that led to a lower high at J. This price action verified the false breakout of the zone. So let's go ahead and talk about what I mean when I say a false breakout of the zone, and what I mean when I say a higher low failure. So first of all, a higher low failure, we just talked about that a little bit, but let's go back to some notes to kind of establish what exactly we're looking at. So this entire scenario that we're looking at right here is an uptrend reversal that has a lower high that gets established. And that's usually what I look for when I'm trying to look for the conclusion of an uptrend that's been going on for a good little minute. So let's look at this example from May 27, 2021. Notice how on this day we also had a very strong trend to the upside. Then we formed the last higher low of the entire upswing right here. But notice how very similar to today, we didn't really have strong candles that made the new high. We had more of a little small back and forth that had candles with a lot of wicks. If we go back to today, look at what we did. We had a lot of candles that just went back and forth, a lot of wicks, and then they eventually said, okay, let's move up. Look at this scenario, same thing. A lot of wicks, not a lot of decisiveness. So then eventually they just said, all right, let's move up. But then that didn't last too long. They pulled back, created a lower high right here. That lower high eventually led prices to break past that higher low support level. And that right there is what you call a higher low failure. So if we go back to today, look at what happened. That lower high eventually led us past the higher low support level at I. So we can consider that a higher low failure as well as an uptrend reversal. And the thing about it is, an uptrend reversal and a higher low failure can actually occur within the same setup. Now they can occur independently from one another. You know, every higher low failure does not have to be an uptrend reversal with a lower high that gets established. But you can see them happen a lot of times together. And when they do, it just increases the chances of that selling move actually coming to fruition and being successful if you were able to get in and take a short trade. So this particular session right here from November the 22nd this year, it saw an uptrend reversal lower high established at points A and points B. Now look at the one from point A. This looks very similar to what we saw today. We had the last higher low that got established at the end of the uptrend. Notice how we had all of these wicky, blocky candles. Was not really too much decisiveness right there. It's a lot of indecision. That's what's showing. That's what the wicks are showing us right there. And then we had a lower high that eventually led us to breaking past that higher low level, and then the downtrend continued. Same thing right here at B. Same concept, same scenario. Lower high that eventually led to prices breaking past the most recent higher low, come back to retest it, and then the downtrend continues. So you always want to remember that when it comes to the uptrend reversal that has a lower high that gets established. So you take those two setups, and both of those were present right here. We had the higher low failure, the uptrend reversal, higher low established. But what we also had was a false breakout of a trading range, which is one of my favorite strategies also. So anytime it comes to a false breakout to the upside, if prices ever get back into the trading range, once they make that first lower high inside of the trading range or within the immediate vicinity of that trading range, that's where I look to go short after that lower high candle closes, and then I look to take prices back down all the way to the lows of that zone. And that's exactly what I was able to catch right here at trade 5. So the lower high at J gave me the confirmation that I needed to show me that the breakout was not legit. The breakout was a false breakout, and now that prices are back into the zone, I'm looking just to take those all the way back down to the low. And that's pretty much what I did on trade 5. So if we go back and look at another example from May 11th, 2021, this is almost an exact carbon copy of what we saw today. So let's go back, look at today. Notice how we were in a range, right? Range had a false breakout. We got back in it, had a higher low failure, right? Now look at 5/11/21. We were in a range between 34,210 and let's call it 34,120. That's a big range at the bottom. So bouncing back and forth, bouncing back and forth. Now on this particular day, they didn't even have enough momentum to push prices all the way up to test the top of the zone. So that right there is bearish signal number 1, which makes the higher low more likely to get broken through. Number two, the reason that prices are more likely to get broken through, prices formed a lower high at point B. So you have a rejection from the top of the zone followed by a lower high that eventually leads to point number three, which is the break of the overall higher low and the fact that the downtrend was already strong that day. As you can see, we were down 1 1/3%, and that's 470 something points, which is a pretty significant downtrend on the Dow Jones. So you add all of those things into the factor, and it just makes everything more likely for that higher low to get broken through. So that's pretty much all it comes back down to. And let's just scroll through these last two examples. So this is another example from the 30th of November this year, where the uptrend reversal at A was also a higher low failure setup, right? Same thing right here. This is from June the 9th, 2021. The uptrend reversal higher low can also occur as a higher low failure like it did at A right here. So anytime you get both of those setups together, it definitely increases the probability of that short trade being able to work out. And this trade at 5, I think, was absolutely perfect because I had 3 different setups all combining in one. I had the uptrend reversal with a lower high that gets established. I had the higher low failure, and then I had the false breakout of a trading range to the upside that eventually made the first lower high as prices broke back in to the bottom of, well, into that overall trading range. So I feel like when it comes to taking trades, that's what I need to do. I need to look for, first of all, only trades that fit my trading plan. Today I did a great job of that. I took 5 trades, all 5 of them fit my trading plan, even though all 5 of them weren't successful. That was due to the execution on my part, but that's on me. But first thing you want to do is find a trade that fits your trading plan, and then look for multiple confirming signals. The more you have, the better, and the more likely it is that that trade works for you. So that's exactly what I was able to do today, and I think that's what I should be looking to do in the future. So that was the last trade I took today. I was able to finish the day with a decent amount of profit. I'm happy about that, and I'm just really happy about the fact that all 5 trades that I took, they all follow my trading plan, because yesterday I finished in profit and I made a good profit, but the trades that I made profit on were not in my trading plan, and I felt just very uneasy about that all night long last night. And I was like, look, when I woke up today, I said I'm coming into the market and I'm going to follow my trading plan no matter what. I'm not worried about how much money I can make or anything. I just want to see my best trades and my best setups work in the way that they're supposed to, and I'll take the results that come from that. So that was pretty much the mindset I had today, and I think the biggest thing I need to do going forward to get better is to just focus on being more detail oriented. The reason I took losses at 1 and 2 were not because I was trading bad setups. I was trading my right setup the way I was supposed to, but I wasn't paying attention to the very small details. So that just goes back to what I said earlier about making sure that you're 100% focused, not 99, 98, or 99.99. You need everything, 10 out of 10, 100 out of 100, 5 stars out of 5 stars every time. And I feel like if I can bring that level of focus to every market session, the sky is the limit. So I appreciate you guys for tuning in with me today. That's all I have for right now. It's been a good day so far. I hope you learned a lot, because I know I did. I'll be back tomorrow on December 6th, 2023, ready to do it one more time. But until then, you guys, have a good one, study hard, and take it easy.